Welcome back. Previously, we have learned about the introduction, concept, and meaning and characteristics of accounting for management. So, let us discuss about the further methodological aspects that comes under the same heading. Next area, scope of management accounting. The scope of management accounting is very wide when compared to the other two branches of the accounting. The Seventh Conference of Accountants held at Amsterdam in 1957 has recommended the inclusion of the following subjects in the framework of management accounting. So, in scope of management, you will be discussing about the what all areas from which the tools and techniques has been borrowed for management accounting. So, in this area, you will be learning about the subjects that are related with management accounting. First one, financial accounting. We all know what is meant by financial accounting. Financial accounting refers to the recording of business transaction in the books of accounts and preparing financial statements. It supplies maximum data to management. Actually, management of accounting comes after financial accounting because management accounting is prepared on the basis of details extracted from the financial accounting. So, financial accounting is a part of management accounting. Next one, forecasting and budgeting. These two terms are of great importance in the field of decision making because forecasting is a prediction of likely events in the future, and on the basis of such predictions that helpful in preparing budgeting. So, these two tools, forecasting and budgeting, are interrelated. And we all know budgeting means expressing the plans, policies, and goals of the enterprise for a definite future period. It helps to exercise budgetary control. And the forecasting and budgetary controls, these tools are applied in the management accounting so as to help the top level management in proper decision making. So, management accounting consists of forecasting and budgeting. Next one, interpretation of financial data. Analysis and interpretation of financial statement is useful for getting an idea about the firm's performance and prospects. A number of tools and techniques are used for the analysis and interpretation of financial statements. We all know what are the various tools such as comparative financial statements, common size statements, trend ratios, ratio analysis, fund flow analysis, cash flow analysis, and many other tools which are of great importance in the interpretation of financial data in case of management accounting. Because management accounting's main activity is interpretation of financial data. Next one, tax accounting. In the present complex tax system, tax planning becomes an important part of the management accounting because determination of taxable income and tax liability of a firm fall within the scope of management accounting. It is up to the management accountant who has to plan accordingly so as to reduce the tax burden of the organization. It is his responsibility, and all these areas comes under management accounting. Next one, office services. By the term office services means office routine is controlled by the management accountant. So, what are the activities that comes under the office routine? To discharge this responsibility efficiently, he has to deal with data processing, filing, copying, duplicating, dealing of inward and outward mails, proper filing of various reports, and analysis. All these activity comes under office services, and the management accountant has to perform all these services. So in general we can say that office services also comes under the part of management accounting. because he is the one who has to study or analyze the financial statements. On the basis of his analysis, he need to prepare various reports, and the proper filing of reports has to be maintained. For example, reports regarding the liquidity has to be maintained in a separate section. Reports regarding long-term solvency has to be prepared in the another section. So all these filing, cabineting, and proper allocation of files, all these comes under office services. So management accounting includes office services also. Next one, cost accounting. It is the most important area and one of the other branch that comes under the main branches of accounting. We all know what is meant by cost accounting. Cost accounting is a system of accounting set up for recording and ascertaining the cost. It is considered as the backbone of the management accounting. It provides tools such as standard costing, budgetary control, marginal costing, etc. All these tools help in planning, controlling, and decision making. In general, we can say cost accounting provides cost related data to the management so that the management accounting properly analyze and study such data and present it in a meaningful information that ultimately help the top level in taking decisions. So thereby we can say cost accounting also comes under the management accounting. Next one, cost control techniques. Actually, this is a heading or area that comes under cost accounting. Still, cost accounting is a wide area. Cost control techniques is also a wider area that comes under the cost accounting, but still cost control techniques is of great importance. That is why it is shown as a separate point. In cost control techniques, it is one of the objective of management accounting is cost control. We all know that. This is done by comparing the actual cost with the budgeted standards, analysis of variance, and reporting to the management. For this purpose, various techniques like budgetary control, standard costing, inventory control, etc. are used. And all these techniques has been studied in management accounting also. Next one, statistical methods. As we have learned that one of the nature of management accounting is it is a multidisciplinary subject, that it includes different subjects, and one of the subjects that comes under management accounting is statistics. So naturally it includes various statistical methods. Today, management accountants use statistical and quantitative techniques like linear programming, game theory, etc. in decision making process. You will learn about these statistical methods in advance in your MCOM classes. Next one, reporting. We all know what is meant by reporting. One of the most important duty of a management accountant is to prepare reports regarding the functions of the enterprise and submit the same reports to the management, and the management takes proper decisions on the basis of these reports. So reporting activity is also a part that comes under the management accounting. Next one, internal auditing. You have learned about internal auditing in your auditing paper. So internal auditing system is necessary to judge the performance of each department, because it is usually done by an internal auditor. The actual performance of every department and individual is compared with the predetermined standards. Internal audit assists the management in fixing the responsibility of different individuals, because in management accounting also works like this. In management accounting, it also set aside various standards and on the make sure whether the departments or the personnel working in the organizations are working according to those standards, and on the basis of that corrective measures or decisions are taken. So internal auditing also comes under the activity of management accounting. Next area, basic principles of management accounting. Before we go into the basic principles of management accounting, you have a general idea about the branches of accounting, and you should have a proper information about the various objects and objectives of management accounting. On the basis of previous studies and analysis, we can say that the objectives of management accounting includes collection and analysis of financial data for analysis and interpretation, provide necessary information for management activities, helps in evaluating performance, helps in motivating employees, communication up-to-date information, and thereby help in organizing and coordinating the entire activities in the organization. In general, we can also say that management accounting helps in policy formulation as well as providing proper reports. And finally, we can say the ultimate objective of management accounting is to enhance or maximize the wealth of the owners. So this is with regard to management accounting. Let us discuss in detail the basic principles of management accounting. First one, principle of exception. The time and effort of managerial personnel are precious. We all know that. Hence, they should pay attention only to those problems which are unusual or exceptions. That is the concept of principle of exception. In business, there may be numerous activities or issues related to day-to-day operations. And if the organization or the top level manager or the concerned personnel within the business, if they are taking into consideration each and every individual aspect, then the organization will not be in a position to work smoothly. So it is up to the concerned personnel within the business to analyze all the activities within the organization and make sure what all items are usual and what all items are unusual. And the management or the concerned personnel should pay attention only to those problems which are unusual or exceptional, because usual problems can be dealt accordingly, because there will be a certain plan of action and that action has to be implemented. But in case of unusual and exception cases, the organization must take due consideration. So one of the principles of management accounting is principle of exception. That means giving importance to unusual or exceptional activities. Next one, principle of objectivity. Management accounting lays emphasis on accurate facts and figures. In the meantime, a systematic prediction about the future is also made. There should be no room for human bias or prejudice. The concept is the management accounting always give importance to actual facts and figures, not on the basis of any relative measures or average measures like that. The information has to be precise. It has to be systematic, and the figures has to be facts and figures has to be very much accurate relating to the business. Only on the basis of such accuracy the proper decisions can be made. So principle of objectivity mainly emphasis on accurate facts and figures. Next one, principle of consistency. The principle of consistency is followed when presenting information to the management. In order to make a meaningful and useful comparison of information, management accounting uses the accounting principles and practices on consistent basis year after year. For example, we can use different methods for studying different financial details. For example, for computing the depreciation of an asset, we can use different methods. So the methods chosen by the concerned business or the concerned accounting practitioner, there should be consistency in using the method. The accountant or the management accountant, especially the management accountant, we will be discussing management accountant. Management accounting should always rely on one set of methods because the main duty of management accountant is to compare the details of information relating to different periods. If the management accountant is using different methods for different period, then the comparison will not be effective. So for proper comparison, the management accountant should follow a consistent method of activity. If they are following a written down value method for computing depreciation for the previous 4 years, the management accountant should continue with the same pattern. Then only the comparison can be done. If different methods are followed, we can't make proper comparisons. So that is the concept of principle of consistency. Management account should follow a systematic and consistent method for computation as well as analysis. Next one, principle of relevance. Management accountant focus its attention on relevant data because irrelevant data are of no use to management. So in principle of relevancy, it is the duty of the management accountant to give importance to relevant data. Because irrelevant data will not be helpful for the organization in decision making. I hope you understand that concept. Let us go to the next one. Principle of integration. Management accounting is based on the integration of all managerial information. So the management can make fullest use of information available to the at the minimum cost. So that is the concept of integration. Means integrating the entire operations of the business within the organization. It is the duty of the management accountant to analyze all information relating to the business. Since it requires all information, in general we can say there is an integration of all the activities within the organization with regard to the information pertaining to the business. That is the concept of principle of integration. Only with the help of integration, the management accountant can acquire all the information relating to the business. Next one, principle of revaluation accounting. Management accounting uses the principle of revaluation accounting in order to keep the data up to date. I hope you all know the meaning of revaluation accounting. In revaluation accounting, you will consider the present changes in the concerned items. So the management accountant also follow the same principle of revaluation accounting, that is, it consider the up-to-date information regarding the financial data as well as the operation relating to the business, because only on the basis of up-to-date information the management accountant can provide accurate information that are helpful for the management in decision making. So the management accounting must have the principle of revaluation accounting. Next one, principle of utilization. The management accounting should reveal whether or not the resources of the business are judiciously and profitably used. That is the principle of utilization. This principle emphasizes that the management accounting should always reveal the activities done within the organization regarding the scarce resources utilized and how profitable they have been utilized. The management accounting should reveal all those information. Since management accounting has a wide coverage over all the activities of the organization, it has access to the various resources and information of the business. So in that case, it is a duty of the management accounting to reveal complete information regarding the resources utilized and the profit generated from those resources. Next one, forward-looking approach. Management accounting is made useful through standard costing and budgetary control in order to anticipate and prevent problems. This results in forward-looking and proactive approach. Because in management accounting, even though the informations are taken from the financial accounting, such informations are presented in such a manner that helpful for the top level management in effective policy making and decision making, not only for the present situation as well as for the future. So in general, we can say One of the principles of management accounting is it is a forward-looking approach. So these are the major principles that comes under the management accounting, and on the basis of these principles only the management accounting operates. So we will discuss about the further cases and theoretical aspect that comes under the management accounting in the next session.